Hello everyone and welcome to the Geo Cannabis Podcast, the show that helps cannabis companies manage their costs and tax liabilities through tax planning and proper cost accounting. I'm your host, Desiree Anderson, certified public accountant and enrolled agent at Geo Tax and Accounting Strategies. I specialize in cannabis, CBD, and hemp tax and accounting. I chose to specialize in the cannabis space because of my long-term expertise as a tax and financial auditor. As a former government tax auditor, I saw the types of mistakes businesses made from a tax perspective, which led me to want to help cannabis business owners and CEOs stay under the taxing agency radar. As a former financial auditor, I know the importance of a financial electronic audit trail. Such a trail gives investors, lenders, and valuation experts the confidence that they need to make financial decisions beneficial to your business. Thank you for tuning in, and I hope you enjoy the show. Hello, everyone, and welcome back to the Geo Cannabis CFO podcast. I'm your host, Desiree Anderson. On today's show, I'm going to be talking about independent contractors versus W-2 employees in the cannabis industry. I'll be discussing the importance of proper worker classification, what can happen if you fail to properly classify your workers, and how the IRS and the state usually determine proper classification, and how most businesses usually get busted for incorrectly classifying their workers. So let's start out talking about the importance of proper worker classification. Now, this is a very touchy subject in most industries because in my experience, there are several companies that misclassify their workers. Now, some misclassify their workers as a way to get around paying payroll tax expense, while others genuinely don't realize that they are misclassifying their workers. But either way, regardless of your reasoning, it's illegal to do so. And if you're ever approached by the state or the Departments of Labor or the IRS or any other agency that has a stake in how you classify your workers, it will cost you dearly in penalties and also in interest, in addition to having to actually pay the expenses that you were supposed to pay to begin with. Now, I've actually been on audits where contractors have been reclassified from independent contractors to employees. When this happens, the business involved usually has to pay years of unpaid employment taxes, including penalties and interest. Now, this can be very expensive, and it can even cause a business to shut its doors. I was once a part of an audit some years ago. It was a hair salon where they misclassified their workers. They were treating their workers as employees, but they were classifying them as independent contractors. And because of this, they eventually had to shut their doors because the amount that they owed in interest and penalties and back expenses was so expensive that they weren't able to survive. So it's very important that you pay specific attention to how you classify your employees and make sure you're doing it right. Now, what's even more devastating is that because there is more than one jurisdiction over payroll, if you are audited by one of those jurisdictions and the audit happens to end up with the reclassification of workers, you should definitely expect to hear from most, if not all, of the other jurisdictions who have a stake in how you classify your workers. For example, if the Department of Labor is first to audit you and the audit ends up in the reclassification of workers, you can rest assured that the states and the IRS are not too far behind. Now, imagine owing back employment taxes, including penalties and interest, to all three agencies. And sometimes you have insurance companies that have a stake when it comes to workers' compensation, so they have their own audits that they do. Now, imagine owing penalties and interest and expenses to all of those agencies and how costly that can be. So make sure you protect your business by truly understanding whether the person you hire is an employee or an independent contractor. And the answer to that question has nothing to do with how you personally choose to pay the worker or how the worker says they want to get paid. The answer is based on federal and state law. period, point blank. Now, protect yourself because a payroll audit that ends in a misclassification, as I keep saying, can be very, very costly. Now, where the confusion seems to come into play with cannabis industry, within the cannabis industry, is with cannabis sales reps and sometimes even drivers. Now, some reps and drivers are treated as employees but paid as independent contractors. Independent contractors are generally companies or individuals with specialized skills that perform certain services or provide certain goods. The key is to make sure that the person you hire will be viewed by the IRS and the states as an independent contractor if your business should ever undergo a worker classification audit. So then the question becomes, what criteria do you use to determine if your worker should be classified as an independent contractor or an employee? Okay, so in order to determine your worker's classification, you'll need to first of all analyze the job according to federal requirements and according to your state's labor test. Once you have correctly determined your worker's status, you'll then have to pay him or her accordingly. So there are two main tests that are used to determine worker classification. One is the common law test, and the second one is the ABC test. The IRS, the District of Columbia, and about 17 other states, give or take, use the common law test to determine whether your worker is an employee or an independent contractor, while the U.S. Department of Labor and about 33 other states, give or take, use the ABC test. Now, California actually recently changed from using the common law test to using the ABC test. I think that was last year or a couple of years ago, if I'm not mistaken, because the ABC test is a lot more, or rather happens to be a lot more stringent than the common law test, as you'll see in a moment as I talk about both. Now, generally speaking, both tests are used to measure how much control a business has over its workers. So whenever you're trying to determine whether a worker is an employee or an independent contractor, what you are truly looking for, and what the IRS and the states and all of these other agencies are looking for, they're trying to determine how much control does the employer have over the worker. And the more control the worker, or rather the more control the employer has over the worker, the more likely that worker is an employee. Now, just on a side note, in September of 2020, the Department of Labor released a proposed rule containing a new test for determining independent contractor status under the Fair Labor Standards Act. Now, the new test would actually make it easier for companies to classify certain workers as independent contractors rather than employees. Now, the proposal is to use two main tests. Test number one would be the nature and the degree of the individual's control over the work he or she is doing. So this test questions how much control does the person you hired have over the work that they are actually performing. For example, if a cannabis company hires me as their CFO, how much control do I have over how I get to the end result, whatever that is? Do I perform my duties based upon my company's policies and procedures, or does the cannabis company dictate how I do the work? So based on that, the Department of Labor are saying that they will use that information to determine, or at least to help them determine, whether or not the person happens to be an independent contractor or an employee. And the second Department of Labor proposal is the individual's opportunity for profits or loss. And usually that normally means, let's say a cannabis company hires an individual on commission. Okay, they hire them on the commission, because normally when you're on commission, you are you are actually an employee. When you're on commission, you should be treated as an employee. Now, if you hire a person and you put them on commission and then you treat them as an independent contractor, well, there really is no opportunity for that person to actually make a profit or a loss, because they don't really have their own business. They are coming in as a worker, and they are being treated as an independent contractor, even though they are supposed to be treated as an employee, because anyone who makes commission, they are usually not running an independent business. Okay, so even though these two examples are still in the proposal phase, okay, the end result boils down to the same thing based on the current test that we use. And what they are trying to determine under the new proposals are how much control does the employer have over the worker. So the end result is the same. Okay, so let's focus on the tests that are currently being used, and we'll concern ourselves with the proposed rules if and when they ever become law. Okay, so under the common law test, there are three main tests. There's the behavioral control, there is financial control, and then there is the relationship of the two parties. Now, keep in mind that the common law test does have about 20 or so other test points that are used to determine control. However, these three are the main ones. Okay, so behavioral control. Now, behavioral control exists when an employer directs and or controls how his or her worker performs the tasks that they've been hired to do. For example, let's say a cannabis processor hires a cannabis manufacturer for the purpose of, say, supplying the business with certain products. If the processor requires that the manufacturer do the work at a specified location and directs them how to actually manufacture those products, how to do the work, the processor is controlling how and where the work is done. In this case, the processor has essentially hired an employee and not an independent contractor. Under the financial control test, control exists if the employer has a right to control their workers' finances. Now, this could include how a worker is paid, who provides the tools to do the work, who provides the supplies and the equipment to do the job, and whether the worker receives reimbursement for expenses. Now, let's use my last example with the processor and the manufacturer. So if a cannabis processor provides the manufacturer with the tools, the supplies, and the equipment to produce whatever it is that they're producing, the manufacturer is likely an employee. If on top of that, the processor pays the manufacturer based on, let's say, commission, okay, or if they reimburse their expenses, that's further evidence that there is an employer-employee relationship between the two parties. This is because there is no financial separation between the processor and the manufacturer. So for the relationship test, the relationship of the parties examines how the worker and the employer operate. Normally, if the relationship sounds like it's that of an employee-worker relationship, in my experience, that's likely the case. So how do you try to create that clear separation between the employer and the worker in the hopes that if you get audited, the employer passes the smell test? Well, a few things that you can do is to make sure that you establish a lawyer-reviewed written contract or statement of work describing the intended relationship between the worker and the company. Also, whether the business provides benefits such as sick pay, vacation, pension, equity, and so on. All of this detail should be spelled out in a legal document. And let me just mention something about contracts. Keep in mind, I'm not an attorney, so I'm just sort of mentioning something that just makes common sense. So just putting something in a contract doesn't automatically mean that it will stand up in court, okay? The content has to be legal in order for it to stand. That said, once again, I'm not an attorney, so please consult with your attorney for legal advice. Now, a crucial determining factor of the relationship between an employer and a worker is whether or not the worker's business is out of the usual course of the employer's business. So let me explain what that means. So for an example, let's say a painter is hired to paint a cannabis dispensary. That painter would likely be an independent contractor because the function of a dispensary isn't to paint. However, a cannabis salesperson working for a cannabis dispensary can be an employee, since the sale of cannabis is a crucial part of what the dispensary does. Okay? All right, so now let's move on to the ABC test. Now, this test is used by the US Department of Labor and 33 other states, give or take a few states here and there. The ABC test determines worker classification by examining the following: absence of control, business of the worker, and, in quotes, customarily engaged in. And we'll talk about that. So the absence of control test is similar to the common law behavioral control test. Absence of control exists if the worker is free from the direction or the control of the hiring organization, both by contract or agreement and in fact. So what does this mean? Okay, so what this means is that the worker and the organization have agreed on the terms of their working relationship, both by contract and by the way that the work is actually being performed. So this means that when you say agreements and in fact, this means that if you actually sign a contract, but at the same time, you don't necessarily abide by that contract, because you can sign a contract to say a person is going to be an independent contractor, and this is how, and this is the agreement. And the agreement can actually look like, okay, yeah, this is definitely based upon what the words in the contract, this definitely sounds like a independent contractor employer relationship. But when you say and in fact, that means that that individual also actually has to be working or doing the work as an independent contractor. So there's no point creating a contract that says, here's how we are going to establish our relationship, and based upon that contract, we are establishing our relationship as you being an independent contractor, but at the same time, when you do the actual work, you're being treated as an employee. So the work being performed has to be independent of any direction from the actual hiring organization. The second test is the business of the worker test. So in order to be classified as an independent contractor, the worker must perform work that is unusual in regards to the employing organization's business or off the hiring organization's premises. For example, if you're on a cannabis farm, farmers you hire to work on the farm cannot be classified as independent contractors because they offer the exact same service that the organization itself is engaged in. In order for a worker to qualify as an independent contractor under this test, they have to perform a service that has nothing to do with the service of farming. Now, this test is similar actually to the common law relationship test. And the third ABC test is the customarily engaged in test. Under this test, the worker must be customarily engaged in an independently established trade, corporate occupation, or business of the same nature as the work that's being performed. For example, if a cannabis company hires someone to help with marketing projects, that individual must actually be involved in an independently established trade, occupation, profession, or business that offers marketing services. The hiring entity, which is the cannabis company, has to prove the independent business that they hired is actually in existence at the time the work is performed. So the worker should be able to prove that he or she operates a standalone business. And this can be done by having a business license, having their own insurance, and advisably, I would say, applying for a tax ID number for that business. Now, I always advise clients never to use their social security number in place of a federal tax ID number. There's just too much fraud out there to take that chance. Now, even better is if the independent worker routinely offers their services to the public, because that's sure proof that the worker owns and operates an independent business outside of the cannabis company that hired them. For example, I have my own accounting business. So if I were hired by a company to handle their accounting, I also have several other clients I work with. So I can definitely prove that I run an existing business and that I ran that business when I was doing the actual work for the cannabis company. So in other words, the cannabis company needs to make sure that they establish a clear line of independence between themselves and the contractor that they hire. Now, also, the Department of Labor also looks at what they call economic realities. So what that means is the more dependent the worker is on a particular employer for income, the more they lean towards employee status. So whichever test you use to determine your worker's classification, whether it be the ABC test, the common law test, or something in between, it's very important that you know your worker's correct classification as clearly as possible so as not to find yourself in trouble with the IRS or states and having to pay thousands of dollars in fines and penalties if you are ever audited. Okay? So before I sign off, I want to talk about some of the circumstances that may trigger a worker classification audit. So from my experience, there are two main triggers that will cause the IRS or the state to come snooping around outside of a random audit. And in both cases, it starts with the worker. So usually when the IRS or the state, when they audit a company, there are different reasons why you may be under audit. Sometimes it's just random. Okay. Now, really, the IRS and the state, they're not really running around looking for companies that are misclassifying workers, but there are certain triggers. Let's say you hire a salesperson in your cannabis business, okay, and then you decide to pay that person as an independent contractor. Well, you're happy because by paying them as an independent contractor, you escape the requirement of having to pay payroll expenses for that worker. And as we all know, payroll expenses can get quite expensive, especially as you hire more people. And the more people you hire, of course, the more you're going to have to pay in payroll expenses. And payroll expenses, of course, cuts into your bottom line. Now, your worker is happy because they are receiving all of their money. If they were hired as an employee, the business would have to withhold income tax and FICA taxes, which is Social Security and Medicare. So this could mean that if the worker was supposed to receive, if the employee was supposed to receive a check for $1,000, that can become $700, or rather, it can become a $700 check after you, or give or take, after you deduct income tax for both states and for Fed, and also deduct FICA taxes. Whereas if you hire them, or rather if you treat them as a contractor, they get their entire $1,000 and they're happy. The flip side to that is the worker is still going to have to pay taxes, but as an independent contractor. And as an independent contractor, they are wholly responsible for paying their own taxes. And as an independent contractor, they are solely responsible for paying 100% of their self-employment tax, which is about 15.3% of their self-employment net income. Now, as an employee, usually the employer pays half of that. So whereas an independent contractor or a business owner has to pay the entire 15.3%, if they were classified as an employee, they will only be required to pay 50% of the 15.3, which is, I think, 7.65% or so. And in addition to paying self-employment tax, they still have to pay income tax. So between paying the two types of tax, which is self-employment and also income tax, their tax bill can be quite high. In addition to all of that, if they weren't paying estimated taxes throughout the year, they'll be stuck with a large tax bill at tax time. Now, usually when an individual, if you were actually an independent contractor, or if you were actually a business owner, and you got paid $100,000, more than likely you're going to have expenses. So your expenses are going to reduce your actual tax liability. So let's say you make $100,000 and your expenses are $30,000. You're actually now looking at $70,000 being your self-employment net income. But if you are misclassified and you were supposed to be treated as an employee, but instead you were treated as an independent contractor, that you're going to probably have to pay tax on the entire $100,000, because as an independent contractor, you don't really have any expenses. Okay, so you're being paid by your worker, or rather you're being paid by your employer as if you were an employee, which means that when you come into work, you are not having to buy any of the supplies, any of the equipment to do the job. Everything is right there for you. So your entire pay becomes a taxable income. So because of this large tax bill, what normally would happen, so let's say the contractor provides their accountant with a 1099, and then once the accountant finishes preparing their taxes, they're going to now tell the contractor how much they owe. And for a lot of people, it's a shock. And what makes it so shocking is because in addition to paying the income tax, they're also stuck with that 15.3%, which can really, really cause your entire tax bill to be much higher than you anticipated. So then if the accountant starts to ask questions, and based upon the questions, that they then determine that this worker was actually supposed to have been classified as an employee and not as an independent contractor, then all of a sudden there is a form that we accountants can fill out, which will allow the taxpayer to only pay half of the 15.3%, and then the other half would need to be collected from the employer. So then the IRS, of course, goes after the employer to collect the additional tax. And that, of course, can trigger an IRS audit. Okay. Now, the second scenario that causes or that can trigger a payroll audit is if a former worker decided to apply for unemployment. So let's say the worker loses their job for whatever reason, and then they decide to file for unemployment. Even though they were being paid as independent contractors, because in their mind, when they walk into the job every day, in their mind, they are employees of the business. Even though they're being paid as independent contractors, they may not understand the concept, or they may not understand the difference. So when they lose that job, they're going to go to the Department of Labor, and they're going to apply for unemployment. When that happens, the Department of Labor is going to realize that the company has not been paying in to unemployment. So now the question becomes, is that business not paying in because they are misclassifying their workers, or are they not paying in because even though they are paying their workers as employees, they just so happen not to be paying their Department of Labor expenses. Well, of course, the next thing that happens is they're going to then want to find out what the answer to that question is, and that is what will trigger an audit. Okay, so keep in mind that when you pay your workers as independent contractors and you think that you're getting away with it, that more than likely something that you didn't expect can trigger an audit. Okay, well, that's all I have for you today. Thanks for joining us this week on GeoCannabis Accounting. Thank you for joining us this week on GeoCannabis Accounting. Make sure to visit our website at geotaxandaccountingstrategies.com, where you can subscribe to the show by clicking on the podcast tab so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too. I am also available to help cannabis business CFOs, investors, and other accounting professionals with tax planning, gap accounting, as well as cost accounting. Please don't forget to tune in to our next episode. And this is where I sign off. Have a great day.